The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 19th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have one heck of a terrific Tuesday. I know I'll do all that I can for you during the next hour. We'll take a look at extraordinary tools that help us to identify where price is headed to. We'll utilize that lightning bolt tool, that A to B equals CD. We'll take a look at Fibonacci, retracements and expansions. We'll take a look at Japanese candlesticks. Because after all, the bulls and the bears, they make signs for you and I each and every day, and so we'll go read those signs. Now, this is an interactive show, which means we'd love to hear from you. So just give us a call, overcome that hurdle line, know what it's like. There's always a little anxiety calling into a talk show out there. There shouldn't be, but I know I have it too even when I call in, even though I do this, a couple hours a day. It's a whole different thing when you get on the stage out there. But give us a call anyways, 877-927-6648. We'd love to hear from you. Internationally, that's at 727-445-1044, and you and I will go hunting for bulls and bears. And let us always, folks, shoot for the moon. The reason is because even if we don't get there, we will be heading towards a star. And you are a star in this wonderful world, folks. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading up 45 points. She's trading out at 16,884. S&P is up 19 points, trading out at 1976. 1976. That was a pretty good year. NASDAQ Composite up 9 points out there. Russell 2000 up 4. NDX 100 up 5. New York Stock Exchange up a couple. Gold back $2 right now. Trade at $12.97. Big movements in the currency market. U.S. dollar index up 279 ticks, up 81. Trading out at $81.91, completing an A to B equals CD pattern to the upside, at least the 1-to-1 pattern. We're going to take a look at the currency market. In fact, we're going to start by taking a look at the currency market. I did not do that during the last show, so I want to do that now. So let's switch over. Let's take a look at the charts out here. I utilize 3 different charting tools. I use the e-signal is the data feed. I utilize Instant Windows. That's the chart that you're looking at right now. I utilize e-signal for my charts, and I use Ninja Trader for a number of tools. I run my automated trading strategies and other things on the Ninja Trader platform. It's just an easy direct connect right into my different brokerage accounts out there. In any event, you didn't want to hear about that. What you wanted to know is, hey, what's going on with the Euro-US dollar? We took a look at the Euro-US dollar a week ago or so with our man Peter from Park City. He loves to trade this, and he was taking a look at for a bottom out here. And we taking a look at the pattern. We have not seen a reversal signal that's had any follow-through out here. And what that means is that this A to B equals CD is likely the first the target area for the euro to move to, and that's right at about the 1.3209 level. Now, I can make the case 1.3075 is more likely a target we'll see as price moves down. But even its best patterns out here made a nice low. Relative strength low on July 31st, moved lower, formed what looked like a hammer candle on the trading session of August 6th. It really wasn't, but even if we called it a hammer candle, no follow through the very next trading session. What do we have here? You did get a bullish candle reversal signal on August 8th. No follow through on that next session out there. Even a bullish candle on August the 15th on Friday. No follow through out there. Without follow through, folks, without follow through in life, what good are we? So in this case here, the Euro-US dollar looks like it's headed down towards that 1-to-1 A to B equals CD. If we take a look at retracements now, oops, I didn't mean to grab that. I meant to grab this right here. If we take a look at retracements off of this swing point, sticks out at me. That is July 10th, 2013, all the way up to the high that's put in here. You also see that will form a Gartley buy pattern, a potential Gartley buy pattern. Just because in order to have a Gartley pattern, you've got to have you only have to have one thing. We need an A to B equals CD. Larry Pesavento is the one that really, brought this to light out here. Is just the remarkable ability for price to move to these Fibonacci retracement and expansion levels, kind of like they are price magnets. So when you can get an A to B equals CD, that also ties right into a Fibonacci level, it just increases the probability for the trade to work out there. But if you go read H.M. Gartley's book, which you can do out there, I recommend doing that. If you go take a look at page 222 and elsewhere, you'll see that the only requirement is an A to B equals CD move out there. Well, in order to form a Gartley. Well, that's what we have that would be taking place out there in that 132-ish range. So we'll come back, but it looks like that's where the euro is headed to. If we take a look at the Great British Pound out here, now the Great British Pound is broken through a trend line. That's the trend line coming off of July 19, 2013, and it broke through that trend line back here on July 24th. And now it's trading below a set of swing points out there. So the Great British Pound is certainly showing some weakness out here. If I utilize this tool, it's kind of a cool tool. It's called cool tool. It's called Pesavento pattern. So what it does for me is in one click of the button, it identifies expansions and contractions between swing points out here. And what I can see is coming off the swing point back here on February 5th to where the Great British Pound is at right now. That's a 0.618 retracement. If I take a look at the next swing point up, which is on March the 24th, you're at a 0.786 retracement out there. If I take a look at another retracement from the trading session of April 15th, you've done a 100% move of a move. And then a retracement or an expansion, I should say, from June 11th, that's a 1.272. Now, unfortunately, for the Great British Pound, it's coming into this level here where there should be some decent support. But the problem is it's coming in with a wide-ranging bar out there. There is no A to B equals CD to the downside that you could draw in here. And so this could very easily be the A to B leg that is setting up. If you were to find some support here in the Great British Pound, pretty good chance you'd see it bounce up to about 1.684, maybe even 1.697, setting up the C to D leg. But I'm not saying that the work is done to the downside here. I'm just saying it's been a straight line move to the downside, and now it looks like perhaps the pattern is to make the B to a C of an A to B equals CD to the downside. Let's go take a look at the U.S. dollar, Japanese yen out here. We had pointed out the patterns inside the U.S. dollar, Japanese yen, and that was the break of the channel line, break of the trend line. It did that back here in the trading session of June the 30th, July 30th, I should say. Last time we saw the U.S. dollar, Japanese yen do that, that's when it took off to the moon and made an expansion of swing points out here, and that was the expansion of the May 22nd high down to low on June the 13th. So we could have that same thing unfolding because price broke through the trend, came back and tested it, and it's back outside the trend, so therefore it has proved itself that it does not want lower price out here. Right now, it's got a little bit of resistance, and its resistance, this little candle session out here, this little doji on July 31st, meant that it lost its way, it got tired. We saw some leaves fall off the tree on August the 1st out there, so in order for the U.S. dollar, Japanese yen to get to the A to B equals CD pattern, that looks like this. Let's go ahead and put that on the screen for you. The A point's going to be the low out here on July 8th. The B point's going to be July 30th high. The C point, that little candle session on August the 8th out here. 1-to-1 A to B equals CD would take up to 103.50. Just needs to clear resistance at the 103.07 mark out here, and that is in the U.S. dollar, Japanese yen. Let's do one other thing. If we take a look at the U.S. dollar index, which is includes the basket of those three currencies, those are your biggest holdings with inside there. In fact, let's say the euro, Great British Pound, and U.S. dollar and Japanese yen is 53, about 72 to 76. Somewhere right around there. It's pretty close to three-quarters, if not three-quarters, a makeup of the entire index. What we can see of the U.S. dollar index. Now, what we can see here is the U.S. dollar index today completing a 1-to-1 A to B equals CD to the upside. The A point is May 8th. That's the low at 78.93. The B point is up here on June 5th. That's at 81.07. Makes a 0.618 retracement down here on July the 1st, and now it is now completed that pattern. Is this the end of the move out here? I don't know the answer to that question because I need to wait to see how today's candle session and tomorrow's candle session would play out. If that's not the end of the move, we're likely to see price move up into the 82.23, maybe 82.48, where it would form a butterfly pattern. So that 82.23 creates a 1.272 butterfly pattern to the upside, and that is what's going on with the U.S. dollar index out there. So that covers our currencies. What we didn't cover is gold. Let's go take a look at the other currencies out there. Let's take a look at the hard metals. I'm going to switch over and although I don't know that I have to really do that anymore, but I'll do that right now. A little bit of a delay. We'll just take a look at our market profiles. We take a look at gold, brought to us by our folks at the TAS Professional out there, our man John Logan, who kicks things off for us here at TFNN each morning at 8 a.m. Check-in time at the Hotel California. It is 8 o'clock. We run 8 till 6 with live trading out here. Support inside of gold on the daily basis. Now I've got it at 1287. Yeah, I got it at 1287 out here. You're trading at 1297, right inside that congestion area, that point of control level out here. A break of 1287 probably spells trouble for Goldilocks. That's what's going on the daily basis. If you take a look at these candle sessions, though, out here, from August the 7th through August the 14th, just narrow-bodied candles. Not the sign of anything bullish, considering we saw a breakout back here on the trading session of June 19th. I think that is the first area. That's the line of demarcation. If we see gold close below that low, which is at 1277, probably sets off in a larger A to B equals CD to the downside. That could take us all the way back into the December area for Goldilocks. That December area being that trading session from December 31st, the low of which was 1183, the high of 1216 out there. If we go take a look at silver, see what silver is doing. Silver weaker than gold on its daily chart out here. It's well below its market profiles out here. Let me get rid of this, clean this up just a tad. There we go. So if we take a look at it, silver is now down to where it really broke out from. When I take a look at a breakout session, I always like to look back a couple of trading sessions. You can use you got to use as a range, right? So in the range here, you're looking at the low of June 19th, and then a couple trading sessions back where you've got some light volume, where in this case here you've also got a junior-ish type swing point, kind of like when you're driving down a street. You know, major intersections, the big swing points, those are easy to pick out, right? Just like major intersection when you're driving. Inside silver, it's where you see a significant change in trend. And that took place inside silver at the highs on July the 10th. But like you and I, we drive down the street, we also pass all of these side roads into subdivisions and elsewhere out there. And those are really what we'll call the junior or intermediate type swing points out here. And that's where that breakout, that's where that level of 1947 is important. You're trading 1942 right now. So silver is on its way back to the lows out here that it formed on December 31st is the way it looks to me. That low inside silver will take you down to about $18.83 out there. Let me just take a look at the retracement levels. Let me just get that, see if we're below the 0.786 yet. We are not. So 1929 becomes silver's last bastion of hope out there. That's your 0.786 retracement. If it fails there, it'll get down to those December lows. This is Steve Rhodes. This is TFNN. Thanks so much for being here, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 55, S&P's up 6 points, and have a request from our Tiger's Den. Folks, if you haven't had a chance to test drive the Tiger's Den, come on over to the homepage of TFNN.com, and the very first thing you should do is sign up for Tiger Dollars. We've got a special promotion that's running just through this week out here. We only do it a couple times a year. It's a great way to be able to invest in yourself. You know, it's the most important thing that all of us can do is, take an hour out of your day, half an hour out of your day at least, and invest in yourself. Best investment you can make, and the best investment to do that with is Tiger Dollars. You've got access to, they never expire. You've got access to all kinds of newsletter services, training services, and so forth to up your game out there. And one of those ways to up your game is to always join peer groups that can take it to the next level. That's what our Tiger's Den is all about out there. So give that a shot as well. The question was, can I take a look at ticker symbol BC, I got to learn how to spell, BCEI out here, which is Bonanza Creek Energy. It's up $1.40, up 2% right now. So let's go take a look at Bonanza Creek Energy out here. And let me just change the tools back here. So just the normal tools that I would use. There we go. All right, so we're going to take a look at Bonanza Creek Energy right now. Trading up at 59.56. Looks like it is headed to. So this had a nice sign of strength. Let's go take a look at this a little bit further back here. See what Bonanza Creek has been doing. Came out with earnings on August the 7th. The earnings or what have you, the market responded positively to that. But had a nice little breakout session right here. Where price pulled back to was this breakout session. That is from May 22nd. Now, the folks that are in there, when you see a breakout session, what you're really looking at is you're looking at for the most part, fund managers that are out there. Because when you see those kind of volume up spike days, it's not enough yous and me's. I know that's not very good grammar out there, but you get the picture. That's not enough individual traders that are making those kinds of moves out there. Not that they can't trail along. In this case here, it's the top of that candle session, which is out at 53.53 that acted as support. Price came back, and that volume there on that breakout session was 3.3 million shares. So the last time that it came back, August 1st, was with 1.2 million shares, and it took off after that earnings day to the upside 2 million shares on August the 8th, as the market was also making an important low out here. Now, in this case here, it's also got a little bit of a double top. So the question is, do I go? I guess the question is, I'm looking at it from a long. I don't know what the time frame is. You got to know what the time frame is. But we're going to take a look at the daily. Then we'll go take a look at a weekly out here. But what we can see with this equity, it's trading in about a 9-point trading range, a consolidation out there. It says it's important for this equity to take out the high. So if you can see a close above 62.94 with more than 878, more than the trading session from June 20th has got the highest volume, so more than 878,000 shares. You likely have a breakout mode going out here. So it's forming a base, right? So you had nice wide price spread, accelerated volume, moves higher on lightish type volume, pulls back on light volume. It's been forming this little base out here, and getting above 62.94 is one place to look out here. If it doesn't do that, your place to look, because it's got resistance, it has market profile resistance, your place to look is in this 53.53 area. I wouldn't use 53.53. I'd use something like 53.85, 53.90, something like that, and that would be your first place for support. Now, if it's coming back with volume, then that's not a good scene out here. I don't see any other resistance inside of this equity. In fact, if it can take out 62.94 with volume, what it's really doing, forget about the consolidation. What it's really doing, it's setting up a larger A to B equals CD pattern to the upside. That's what the daily chart for Bonanza Creek Energy shows. Let's take a look at a weekly chart out here. On the weekly chart, really you've got the same kind of thing out here. Well, its real breakout was all the way back here the week of May 12th, but actually this week here of August the 4th, was that I don't know what the heck is going on here. I'm looking at a weekly chart. This is not good. So the date is not good there, because I think the week ended was August the 8th, not August the 4th. So I'm only going to be able, J&J, I'm only going to be able to give you a real good look here at the daily chart out there to assess what Bonanza Creek Energy is doing. But as long as we're in the energy sector, the energy sector was the only sector that was struggling yesterday. It's all green here as we speak this morning. Now, that's been the laggard out here. So when we assess the market out here, we now have the laggard inside of the S&P 500, the top 10 holdings, which represent way more than 50%. They're all green. So we come back. Let's go take a look at the energy sector and anything else that you'd like. Just give me a call, 877-927-6664. Steve Rhodes, TFNN. Ready?
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the show, folks. Dow's up 45. S&P is up about 5 points. NASDAQ Composite up 6. Russell 2000 up 3 points out there. Before we went to that break, I had mentioned that we were taking a look at the energy sector. Well, really looking at all the sectors within inside the S&P 500. If you're watching us on Tiger TV, I've got the 9 sectors that make up the S&P 500. And included here, what I've got on each of these watch lists is the top 10 holdings within inside of those. And that way we can get a feel for, because it's a weighted structure, get a feel for what is going on. Can't show that. Came out pretty nice. Don't know what that message is there. Al, maybe it could be a little bit more explanatory there. Text too small. That's okay. I got that. In any event, let's take a look at the energy. So all 10 issues inside the energy sector are green out here right now. Number one weighting structure is the XLK. Verizon is off 24 cents. AT&T is down 27 cents. Intel's off 8 pennies. Cisco is unchanged out there. So the number one sector, you've got three or so that are off. The XLF financial sector, all 10 in the green out there. The XLV, the healthcare sector, looks about half and half. The XLY, the consumer discretionary area, Looks like about 60% in the red out there. But we come down to the energy sector, which has been the lagging sector within inside the S&P 500. They're all green. So let's go take a look at them. Now, leading the upside out here, percentage-wise, of those 10, you've got Occidental Petroleum up 1 3/10% out here. So let's go start off with Occidental Petroleum. Let's go see what it is doing. So if we take a look at all of our tools out here, many of our tools, we'll take a look at OXY, by the way, is the ticker symbol. This formed a low out here on August the 1st. Its market profile low, its TAS market profile low, 97.30. That becomes an area of support. That also matches the swing point from August the 1st. Now what we're seeing here today is price breaking out above resistance. That all of a sudden sends Occidental Petroleum into the bullish mode, certainly not bearish camp out here. And so as long as it closes above 101.11 out there, that will be the meaning. Now, has a big old bearish engulfing candle, but it wasn't volume off the high or anything. There was 5 million shares to the downside, but the prior day was 5 million shares to the upside. So it wasn't exactly volume off of the highs. So far today, 699,000 shares in 1 hour of trading, so it's going to be light on volume as it approaches that resistance area, but that becomes your target. So if you were going to take a long position inside of OXY or however you might be trading it, if you were, what you're looking for, the target right around 105.64. If we look at retracements from the high down to the low out here, we'll see that right now today it's trading into about the 0.618 area, which is 102.27. But volume is not too bad. I would expect it to get beyond that, get into 103.75, 105.64 type range out there, and that is on Occidental Petroleum. That is your leader of the top 10 percentage-wise to the upside. If we take a look at EOG Resources, up a little over 1%, up $1.13 right now, looks to be like number 2. Right ahead of Anadarko Petroleum. So we'll take a look at that as well. EOG, now that this morning, right now, getting above its market profile low, so it's really in neutral territory out here. This looks a whole lot more bearish than the prior chart. However, and there is an however out here. Let's do this. Let's go ahead and turn off a couple of these tools. Just make it a little bit easier to take a look at. Let's turn that off for the moment. Let's turn this off. Let's turn this off. And as we take a look at this equity, we'll see there was a breakout. We want to go ahead and measure the breakout and the volume and see where price pulled back here. So here's the breakout inside of EOG Resource. That might be the area to look at a potential trade out there because it's been tested with lighter volume. So let's do a little bit of volume analysis out here. Here's the volume breakout. I wanted to do that. Now they grab the line out here. So put the light blue line along the volume out there. And that volume, by the way, was 8.5 million shares. We can see on the pullback anywhere near that volume. So it was pulling back into a breakout area with some light volume. I would prefer to see an A to B equals CD to the downside or something else, but, that is not there. EOG is the ticker symbol out here. Let's see if we can do this out here. A little bit of delay in some of the data feed. Let me pull this back. This is EOG. No, I'm not going to go ahead and do that as we speak right now. But EOG Resource, because the data there's not accurate. So 101.84 looks like a pretty decent area, but it may not get down there if it can stay above the market profile low, which is at about the 106.09 or 106.11. Here, let me just kind of do this. 106.17 is the number out there. If it breaks below 106.17, 101.84 would be the spot to be looking at. EOG Resources. Let's take a look at Anadarko Petroleum, APC as well. That's up $1.10, just a little over 1% as we speak here this morning. So will the laggard in sector inside the S&P 500 begin to catch fire out here? Now, this is a pretty darn good-looking chart out here. Take a look at this wide price spread accelerated volume. I don't know what took place on the trading session of April the 3rd, but it looks to me like jackpot out there because you want to talk about wide-ranging bars. This goes from a low of 85.95. This is a daily bar all the way up to $100 out there. And volume off to the races, 44 million shares out there. This remains in a nice bullish mode out here. It's just building a base right now. It's building its next base. That base is anywhere between the lows of about 104.45 or so, and the top of the base, the top of the consolidation, the highs of July 16th, 112.80 out there. So it does not look too bad, just building a base. Your buy point on this, probably about the 105.04-ish type area, and that is on Anadarko Petroleum. APC is the ticker symbol. A quick check in on ExxonMobil #1 weighting structure. See if this is able to do anything. Right now the answer is no. This is really the laggard inside the S&P. XLE, the energy sector out here, and it's actually holding the S&P back just simply because of its weighting. But if it ever does catch fire, which means gets above 100.57, really needs to clear that downdraft from July 31st. So you can see here, if the market were to reverse, right, we can't control what the market's going to do next. But what we can do is control what actions that we would take out there. And what we can see here with regard to ExxonMobil is that if this market were to reverse, whatever the reason is, if it were to reverse out here, ExxonMobil would be one of the places you would start looking at as a move because, it is, when it comes to that July 31st area, the diamonds are now, the Dow is above that level, I believe. The S&P's cleared it. The Russell 2000 doesn't even have that downdraft session out there, or it's above its July 31st level. So it's the energy sector at ExxonMobil. However, this could be the laggard that begins to move up. Looks like another request in the den out here from JNJ. So let's go fulfill his request to take a look at FENG. Is the ticker symbol, FENG, and it sounds like Phoenix New Media Limited out here. If we take a look at this equity, it's trading out right now at $11.09, so up above its tested market profiles out here. Boy, this thing really took off recently, so this had very little liquidity in it. Very little liquidity, meaning in the 200,000 range back in the March level. So I don't know what changed that, but somebody really started trading this, market makers, whoever it might be, August the 5th. Big volume all of a sudden coming into this ETF out here. No, it's not an ETF, Phoenix New Media. Coming in on August the 5th, 2.5 million shares to the upside. Now, can we get a feel for what this thing is doing? Because this looks like it's an IPO back in May of 2011, maybe. Now, it's a weekly chart that I'm looking at for you out here. So let me, that's the weekly chart. Let me switch over to the daily chart. But the weekly chart shows some pretty stiff resistance up at these highs. Let's just draw a line across the screen out here. There we go. So right around the 1350 area, that's a hurdle. That's a high hurdle for this equity FENG to be able to get above. But on the weekly basis, you're above market profile resistance. You're into a swing point that's got volume. It does say to me that what FENG wants to do is go back and make a run for those highs in that 1358 level. Volume out there on that trading session was 10 million shares. That's at the upside. That's at the swing point high, and that was taking on a candle session that had only 6 million shares. So it wants to get back up in that 1352 area. Now let's take a look at the daily chart here again for Phoenix New Media. See what it is doing. What it's doing today is trying to get above its market profile high. What it really needs to clear, though, it needs to clear this set of swing points, either the June 24th high, that's got 500,000 shares. Last time up into it was with 1 million shares. So that said price would be back up there, and today is the day. It's back up here with 330,000 shares going against 500. Okay, so that's a fairly decent indication. Now, the resistance out here, the horizontal resistance inside this equity is at the 1140 mark. So if FANG can get above 1140, most certainly you'd like to see it do it with volume. which means I'd really focus on the June 24th session, 500,000 shares. If it can do that, then what it will do is it'll set up A to B equals CD, the upside, or should, if it does it with volume. Your A point's the low back on May 9, 2014. The B point is what we were just looking at, June 24th. And your C point was a retracement down in July 17th, about a point 786, 70% retracement. 1 to 1.618 is what will take you up into that 1381 level. But if it can clear that 1140-ish, I think the 1352 is on the horizon, and that is inside Fang. Do we see anything else that's nasty out here? No. What we see is a high volume high. So the trading session out here on the daily chart for March 5th, remember the weekly chart showed us a high volume high. March 5th says that's the date that it's headed for, and that is 3.6 million shares on March the 5th. Now, you could run into a little bit of resistance out here because you had a lot of folks that were trapped like, I don't know, trapped like rats, I suppose, because they've bought on March 5th anywhere between the level of $12 and $13.58. Remember, this is a game of psychology out here. And if you were one of those people that bought and didn't have a stop in place, which basically covers the majority of the trading population out there, which is so unfortunate, but it does, and you rode that thing all the way down to $8, the next time you see it move close to your entry point or to your entry point, what are you likely to do? Yeah, you're likely to fire away and say, count your lucky stars that you just got your money back out here. So this could run into some resistance, which happens to be your 1 to 1 A to B equals CD, 1216. Look, if you've got a volume accelerating, then probably doesn't run into as much resistance out there. But it does say at some point in time that it wants to make its way back to those highs, and that was in ticker symbol FENG. And that was also for JNJ in the Tiger's Den. And let's go check in on a couple equities out here. A caller, I think it was Vicky in the Clearwater area, Tampa area. She had gotten long Hovnanian and Lennar out there, and those have turned into, or at least Lennar has turned into a nice trade out here. Now, Lennar, what's nice about this is that it is up above its today, gapped up. It's above, maybe this is on the Home Depot news out here, but this is, regardless of what the news is, it is up above its resistance of its market profile. That's a beauty. It's up above 38.07. Let's take a look at retracements now from its most recent swing point high, which was July 1st, all the way down to the low that was put in here. We'll use the time frame of August the 1st out there. So it's also trading right in. Oops, I didn't mean to do that. There we go. It is also, let me blow this out here. Yeah, it's right at the 0.382 retracement, 38.38. But that's how you like to see an equity move. You like to see it gap into kind of a natural area of resistance. Now, volume so far today behind this move, 1 million shares, going into where it started breaking down with 3 million shares. So not too bad. So volume can keep pace out here. That's a good thing. Let's see what else. And the target should be $40.02. Most likely, though, the real target, you start taking a look at this candle session from July 23rd. However, let's take a look at the trend that looks like may have been broken out here, and that's just simply coming from, I'm going to take the top of the July 2nd session. Yeah, how about this? So you've got Lennar Homes building, gapping up with volume, getting above a 0.382 retracement low, getting above the market profile, and also breaking a trend today. Well, folks, there's nothing bearish about that inside of Lennar home. So I hope that she is still inside that trade out there. If we take a look at Hovnanian, that was another equity. That's up 10 cents today. It's up a couple of percent as well. Hey, Hovnanian also breaking through or trying to break through its market profile. But let's take a look at the same things. Let's look at the trend line coming off of the high from June 30th. And we are going to see that yesterday was the day when Hovnanian broke that trend out there. So that's, and it had volume behind the move. So that's pretty good. And what does Hovnanian had? I do remember suggesting that Hovnanian, I liked it better because of the high volume high that it had on a daily chart out here. And that was from the trading session of June 27th. So that is worth taking a look at, especially in this market rally that is underway. And we have not seen much in the way of any pullbacks out there. So that means we really got to go hunting and do some bottom fishing, especially those things that are changing their trend. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is, Dow's up 67, S&P is 7, and the trend is your friend, and the trend is absolutely up. It's a bullish configuration. This little tool that's on my screen, part of the Rhodes Momentum trading indicators that newsletter subscribers get each morning. I break the futures, the commodities, the currencies down into monthly, weekly, daily, 120-minute, 60-minute, 30-minute time frames, so they've got a quick snapshot to understand what the trend of the instrument is. I do that for the indexes, the the index ETFs, the S&P 500 sectors. So they also understand when the trend most recently changed out here, and we are in full bull mode out here. Even with, remember, the downdraft that we had inside the markets was a one-day downdraft. Really, it was all about July 31st out there. So not saying that things can't change. Things can change in a heartbeat. But right now we got to go with what it is that we've got and what it is that we see out here, and we are in full-blown bullish mode. What I want to take a look at, let's go take a look at the let's go take a look at potential potholes out there, right? Let's look at the NASDAQ. Let's look at a 120-minute chart out here. So let's do this. Let's do this as we go off the air and hand off the baton to our man Basil Chapman out here. If we take a look at the 120-minute time frame, and I take a look at the 10 a.m. session back on August the 15th, what we can see out here, I'll go ahead and I'll take a tool. I'll go from that high to where we're at right now, just kind of a little bit of and I'm not drawing a trend out here. I'm just simply showing you that we have been moving higher on less relative strength out here. Now, those patterns can be resolved with a continued move higher out there. We've seen no reversal signal whatsoever on this entire move out there. It's a cautionary sign. It's like your weather forecaster using Super Doppler to take a look at potential storm, maybe potential weather patterns, where a tornado could come together, or a hurricane could turn into a tropical storm, things of that sort. So in the index that is leading the charge on the way up, you've got that potential pattern out there. But if we take a look at expansions, let's go see where price is headed to. Let's assume that price continues to move up, and that is not an issue, because price will move up and get rid of that divergent pattern out here. Well, price right now, as we speak, how about that? It's made a 1.272 butterfly. That price projection would get you to 4,025.57. We're trading at 4,029. So all we need here is a one bad 2-hour session. One bad 2-hour session followed up with another, right? Because if you got no follow through in life, if you're bowling, if you're a bowler out there, if you just simply, get a lighter ball and foul through, raise your hand all the way to the stars out there, and you'll get much better pin action than you will if you just throw it and your hand just makes it to about the hip high out there. That's the same thing in golf. Don't decelerate, accelerate. You want to hit that ball right there. Yeah, our man Earl Anthony, one of the best left-handers out there. One of the best left-handers out there. And but what you want to do is you want to accelerate, and that's what the market is doing right now. It's accelerating. And in the case of the NASDAQ, if it can accelerate past this 4,025 mark out here, well, the next price level is about 4,079. That's what's going on inside of the NASDAQ out here. 10-minute delay on this chart out here because I had the market profiles, which is just simply a figment symbol that we use. If we take a look at the ES Mini out here, the ES Mini, it does not have that same pattern. So it does not have a price relative strength divergent pattern whatsoever. So there's no issue there inside of the ES Mini. Let's go take a look at the Dow out here. I don't know if I can do it. I can do it. Come on, baby. Come on. Let's do it real quick out here. Otherwise, we're just simply going to turn this over to Basil. So if we take a look at it, yeah, there's a slight divergent pattern, but it's not going to take much to get past that high RSI reading, 75.73, and you're at 75.61 as we speak right now. Hey, folks, it is Terrific Tuesday. Thanks so much for being here. Stay tuned. Our man Basil's up next. I'll see you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.